Okay, good morning to everybody. Let us jump into Monday, July 15th, 2024's 5 with Fitz email. Let us see how everything is going with Keith Fitzgerald, and we'll jump in right now. Okay, so it says, good morning. The markets are off to the races quickly today in the early going. All three indices, Dow, S&P 500, and NASDAQ, are in the green and flirting with record levels. I have no idea if they'll stay there by afternoon, but then again, I don't care much. Longer term, there's no doubt in my mind that that'll be the case. Here is my playbook. Number one, profits are always the currency of success, so focus on them. One of the hardest lessons for any investor or trader to learn is that profits are always the currency of success. Headlines come and go. Here is what I mean. The news is constantly filled with things that would make you believe it's a terrible time to invest, yet history shows that it's almost always a great time to invest, especially if you're buying the right companies to maximize profit potential, using the right tactics to minimize risk, taking action at the right moment. My point of view. Too many people today think that success is in the financial market comes down to luck. That not true. Building life-changing wealth comes down to three things anybody can harness: proper education, knowledge, and tactics. If you're waiting for luck to smile upon you, you're going to die poor. And if you'd like some help because you have no idea where to start, how to find right stocks, or lack of confidence needed to play the game, I'm here. Number two, the markets care more about the Fed and rates than the assassination attempt. The venerable Stuart Varney asked me this morning which matters most to the markets, the Fed and interest rates or the recent assassination attempt. Hands down the Fed, for three reasons. Inflation is coming down, not in our wallets, but the Fed's flawed calculations. Number two, Fed is getting benched even though it may not cut rates by elections. Number three, 3 trillion to 5 trillion, perhaps more, realizing that it's trapped offsides and that they are going to pay dearly for having gone to the sidelines in search of safety when they could have had an opportunity. If I've said it 1,000 times, I will say it again. You must be in it to win or you won't win. Number three, Microsoft is still one of the most undervalued AI investments out there. Microsoft has invested $10 billion into AI. The average investor still doesn't grasp the opportunity, which is, of course, a huge part of the opening we've talked about for quite some time. Copilot and Azure could add 25 to 50 billion by next year all by themselves. People ask me constantly about Google and Amazon, but those companies pale in comparison to what Team Nadella has to offer. $500 a share, a target I set well before anybody even thought that was possible. It's just a few percents away at this point. After that, it's $550 to $600 or so per share. My only fear is that I don't own enough shares. Here's a great New York Times article on CEO Satya Nadella and what makes him tick. Number four, Google buying Wiz is a bigger deal than you'd think. Google is buying cybersecurity company Wiz for $23 billion in what is being billed as the largest deal in Google's history. It makes sense. Wiz gives executives and companies using its visibility into the cloud footprint, meaning a comprehensive view. Current tools are piecemeal. Here's why this is a bigger deal than you'd think. Google Alphabet faces growing regulatory and consumer ire, which suggests that the company needs to prove it's serious about security. The deal could help move the business model away from advertising, but also position Google to compete with the likes of Microsoft, Oracle, and even Amazon, all of which continue to lead the charge. My point of view, this is an unpopular view, but I think Google Alphabet is a far more serious trouble than the investing public realizes, which I continue to avoid the stock. I had considered shorting it or buying puts. I bet that the stock declines, but Wall Street has a vested interest in defending all things Alphabet. There are better options, pun absolutely intended. Number five, Amazon gets nasty again. CNBC is reporting that sellers have been penalized by Amazon after the company's algorithms found that they were offering the same products for less on Target's online marketplace. I wish I could say I'm surprised. Amazon's algorithms are the core of an FTC lawsuit that accuses Amazon of using an anti-discounting strategy and constantly crawling the web to stifle competition. Naturally, Amazon's lawyers don't agree and say that its algorithms are a normal part of running a business. I call bullfeathers based on first-hand experience. Amazon all but obliterated my bride's skincare company by rejiggering rankings, pricing, and advertising practically overnight after products began outselling Amazon's offerings. She hung on for a while, but ultimately hung it up as a result. Keith's investing tip. Every investor needs to come to terms with the companies they own. I won't touch Amazon or Google for the same reasons I won't touch Meta. I don't believe the executives can draw a line between permissible business behavior and ethically proper decision-making. You may feel differently, and I respect that. Bottom line, markets aren't the issue. Your mindset is. No excuses. As always, make it a great day. You got this, I promise, Keith. Okay, so another great email from Keith. Doesn't get too political on what happened over the weekend. Unfortunately, over there in the United States in Pennsylvania. Seems to be somewhere near Pittsburgh. So yes, profits are always the currency of success, so focus on them. So as he notes here, three points: buying the right companies to maximize profit potential, for sure, using the right tactics to minimize risk, of course, and taking action at the right moment. And the chart provided here just shows the stock market over the last basically 150 years with an upward bias 80 to 90% of the time. So number two, the Fed is more important than what happened over the weekend in Pennsylvania. So you must be in it to win. So the Fed is, according to Keith, the Fed is the one that's really always going to continue in the driver's seats according to the market's psychology. A lot of people still sort of defer to the Fed. Number three, Microsoft AI. This is something that Keith has talked about quite frequently and continues to be consistent with it. Is that, supposedly I think around 40% plus of OpenAI is owned by Microsoft, and that company continues to be a private company. So Copilot and Azure could add 25 to 50 billion next year all by themselves. So that's another point. And of course he's saying here that he called $500 a share, which is within reach, and he says the stock could be going to 600 or more. And he's always been hyper bullish on Microsoft, as am I. Okay, Google buying Wiz is a bigger deal than you think. So it gives executives and companies using its visibility into the cloud footprint, meaning comprehensive view. And he's saying current tools are piecemeal. So he believes that this might assist Google Alphabet as they face growing regulatory consumer ire. But Keith continues to be negative on Google Alphabet because of basically business ethics. His defense here is he thinks that they're in much more trouble than the investing public realizes, why he continues to avoid the stock. And then he says, of course, Wall Street has a vested interest in defending all things Alphabet. So for moral and ethical reasons, he thinks that Google Alphabet is still a void, even though with this recent new acquisition, which might add synergies. And then finally, for Amazon, point well taken about his wife's company. There's been dozens, if not hundreds, of case studies of startup companies that have good pricing, and then Amazon with their robots and all of their algorithms will basically copy paste and then force startups or small brands out of the market and beat them at their own game. Been proven over and over again. Many case studies. I don't know what it deals with lawsuits, but it says here that this is an FTC lawsuit. So I think for him, it says at the way bottom, of course, every investor needs to come to terms with the companies they own. I won't touch Amazon or Google for the same reasons I won't touch Meta. Keith doesn't believe the executives can draw a line between permissible business behavior and ethically proper decision making. So great email coming off a really sad weekend. Of course, could have been much worse. And then Keith continues to be optimistic, so he's a beacon of light in some stormy waters. Okay, have a good day, everybody, and see you again tomorrow for another review and update.